This should be fun. Obviously, Ryan Selkis, founder and CEO of Masari. I've been a Bitcoin maximalist at times back in 2013, 2014, and I'm saying that in jest. I run, gonna chaperone this panel, but excited to chat about Bitcoin-specific investing. So we're gonna start with Pete, and then we'll go Alyse, round robin, and we'll start to get into some of the themes.
Thanks, Ryan. Good afternoon. I'm Pete Najarian. I'm the managing partner of RW3 Ventures. We are a digital asset and Web3 venture firm. Prior to that, I was the CRO at BitGo. I ran the institutions business at Zappo, and I was a long traditional finance guy, mostly building and running emerging markets businesses.
I'm Alyse, managing partner at Stillmark, which is the first Bitcoin dedicated venture capital firm. We're investing in Bitcoin companies, Lightning companies, and the ecosystem in general as it matures.
All right, I'm Mark Yusko. I run Morgan Creek Digital up in Chapel Hill, North Carolina, and we are a venture capital fund that invests across the digital asset ecosystem, actually with a lot of focus on the Bitcoin ecosystem as well.
Hello, everyone. I'm Greg Carson. I'm managing partner at XPTO Humla Ventures and head of ventures at XPTO. We've been around since 2015 as an original liquidity provider, market maker. We started the venture program in 17, and we focus on what we call financial markets ecosystem transformation. So Bitcoin and everything around the picks and shovels around this ecosystem.
And so when you think about the universe of potential investing for Bitcoin, can I get a handheld? So I'm not just going like this. There's really kind of three core themes. There's the infrastructure layer, there's how do you get institutions in from 0 to 1 and just acquiring Bitcoin, and then there's protocol-specific investments that we're starting to see more of. Lightning just had the announcement this week.
Yes.
And there's some other third-party applications starting to build and extend how they're building on Bitcoin. How do you collectively, and we'll start with you, Greg, and go the reverse order, where do you split your focus? Because you and I think Alyse are investing across that spectrum, and right. Others on the panel are a little bit more specialized.
Well, I think, there's a combination. We're always looking for great entrepreneurs first, and then there's also seems to be themes that happen as a sector. So because our firm has a very strong trading and algorithmic background, we do tend to see a lot of markets infrastructure. When I say markets, so trading and that kind of technology. But recently there's been this big swing with Lightning. We've made a couple new Lightning investments, like leading Zion, getting involved in Impervious, these kind of things. We kind of follow the themes on a quarterly basis, but we also are opportunistic with really great entrepreneurs and technology.
Yeah, and we focus 70% of our capital on equity in businesses, doing infrastructure, everything from Lightning solutions, like you'll hear from Jack tomorrow, to the latest one, just had dinner to close the deal on Monday. Really exciting, the fastest, most efficient ASIC chip that will be coming out in the third quarter this year. We're leading that round with an Israeli company. Really excited about that. And everything in between. 30% of what we do is in the tokens themselves. Bitcoin is a big piece of that, and people say, why should I pay you $2.20 to own Bitcoin? Because we'll actually own it for you and you won't sell it.
So at Stillmark, we think of our investments as fitting two buckets. The first is unlocking the potential inherent to the protocols. So these would be companies like Akaza, which makes multi-sig, so self-sovereign security, available to a broad user base, or a company like Ahoseki, which is offering a service for proof of reserves. So to be able to use your Bitcoin to access a mortgage, for example. The second bucket is what can be built on top of the protocol. So what can be built on Bitcoin blockchain, what can be built on Lightning Network. And so in that bucket, we have companies doing everything from, say, building a distributed marketplace, like a Mechanical Turk, which is Stackwork, all the way to Ibex Mercado, for instance, is our last public investment, and that's the company that's the payment provider, the Lightning payment solution for this conference. So we go pretty broad, and we think of those two buckets as being our main focus. And then the final thing I'll say here is that we think of our work as staying up to date with the developments at the protocol layer, and then anticipating what that means for founders at the infrastructure and app level.
You know, we like Mark, invest in both equity and tokens. Our focus is to be as early stage as we can. We've done some later and more growth stage oriented stuff that we thought were kind of foundational to the portfolio early on. But we tend to look at the world a little bit through use cases and trying to determine what are the use cases that we think can really unpack and in the period of time. I mean, there's certainly a metric and there's a filter you go through around teams and around valuation and all that stuff that's quite traditional. But for us, from a digital asset perspective, understanding use cases that this technology lends itself well to, and lends itself well in a period of time that fits your investment cycle is kind of paramount in my view. And for Bitcoin, we've really only focused on Bitcoin as a store of value use case so far. And I think that'll be maybe controversial in the eyes of some. There's a pretty meaningful debate around what should be the layer one that everything is built on, and certainly Lightning and other opportunities are fascinating. We haven't really participated yet, largely because our focus currently is around what I think is the core use case of Bitcoin still, which is the ability for people all over the world, not just to have a bank on their phone in their pocket. This is not just banking the unbanked, but maybe even more importantly, or contingent to that, creating a world in which a vast part of the planet doesn't live in constant threat of devaluation for their wealth. And all of that for me, and this is how I found Bitcoin originally, I'm still a hodler, it's still the biggest position I own personally. All of it came from a life of and a career of running emerging markets businesses. I ran Global EM at UBS and RBS once upon a time, and I ran around and spent a ton of time in every funky place you can imagine, and there was a consistent theme across them all, and that is that people in almost all of those EM countries have an inability to invest in their home currency and save. And I think the fundamental use case for Bitcoin that for me is singularly most important, at least at this point in the journey, is solving for that, and the demand pull for that will be dramatic and has been. So our plays are more infrastructure centric around, and we're invested in a mining business that we like, and we've got, we put some money into the team at Leaden, which we think is quite a good team that is doing some interesting things in terms of their borrow lend business and a kind of Bitcoin-backed mortgage product. But at its core, what we really care about is starting to solve for that last mile that helps the Nigerian mechanic get paid in Naira, convert it into Bitcoin, and can still live and parse it out every day back and forth into Naira, but doesn't have to live with this constant threat of currency devaluation.
I like the framing there, and it's similar to my own. The king stay the king, to use the wire parlance when it comes to Bitcoin. But there is a universe that's emerging beyond that. One of my questions for this panel, I think if you asked this question last year, 2 years ago, in cycles previous, it might be a little bit of a different answer. But today, I've heard digital asset, token, not Bitcoin specific investment theses from your different firms. Can you differentiate as a Bitcoin focused investor right now? Or do we think of Bitcoin as the leading asset, the 0 to 1 asset that opens up a whole variety of other applications, other use cases that your infrastructure companies might be able to support after they support Bitcoin?
Do you want me to go?
I can start. So where Pete ended was a focus on emerging markets and the sort of solutions and use cases that will be critical to impacting the lives of folks that are unbanked or underbanked. And we take the same perspective, actually. So when we talk about, Ryan said he used to be a Bitcoin maximalist, or has been at times. The way Stillmark thinks is that we're a sound tech maximalist. And that's especially important when you're working with more fragile populations or folks that are not wealthy and have problems as simple as how to store value. But another problem that exists in those markets is the inability to access the global economy. They're locked. They're locked into their local community because there's not an ability to transact online, for example, or to make use of the capital they have beyond their own neighborhood. And so that's where Bitcoin technologies like Lightning Network come into play. And the robustness of those networks and the fact that they are dependable in what they offer is especially important when we're talking about emerging markets. So to be focused on Bitcoin as a fund, I think, is a requirement to be able to do the job well, because the space is so dynamic and the tech is changing and advancing at a rapid pace. So without a really 24/7 dedication to it, I think it's hard to keep up.
I think about this a lot, because you have such a large, and it's a challenge for like RLPs and for investors. Like, okay, they're getting a FOMO in the space, and there's so many things to invest in, and there is a lot of trading opportunities, and there is a lot of places you can invest. So being a core Bitcoin maximalist inside, like we really want Bitcoin, we believe in the Bitcoin story and the network. So I look at it as there's kind of like 3 layers, where Bitcoin is the move glacially slow and build for inevitability layer. So things that reach that layer are really, really great investments. And I think eventually a lot of stuff will end up just sitting on the Bitcoin layer. The next layer is all these level 1s, new derivations from Bitcoin, essentially, since it's open source. And that's kind of like the application layer right now, and where things are getting built and there's value being created and there's new ideas being created. But the belief that I think our thesis in the financial markets is many of those will actually end up moving upstream to Bitcoin eventually. Some will probably become useful on their own right. And then there's a third layer, which is like all this, all these shitcoins and altcoins and stuff on the bottom layer, which is the world's new Silicon Valley, where it's easy to get capital, it's easy to try new things, people in every market can experiment. They may not be the most sound investment, to Alyse's point, for a VC or for us, but we can see them. And there are these 3 levels where there's like, the quality is flowing up towards Bitcoin and the shit's flowing down towards the bottom. That's how I kind of like lay it out. And it's a challenge for LPs. So investors need that filter, and that's where I think firms like ours help that with the communication and deciding on, and helping place the capital in the right deployment.
Yeah, I mean, look, I think Bitcoin is a foundational base layer technology similar to TCP/IP and the internet, and everything's going to be built on top of that. And so 4 years ago, when we launched our first fund, we put 20% of it in Bitcoin as a Series B private investment. Like, no, it's not private, it's liquid. Not to us. We don't trade it, we hold it. And it went up 10x. And I think it's going to go up another 10x easy, because that's gold equivalents. And then the next 10x, which would be total global monetary system, is possible. We can debate all day whether that's going to happen or not, but that's 100x from here. We're going to make way more than that on the things that are built on top of the base layer in Web3, in what I call the trust net. The trust net, so we had the internet, we had the mobile net, now we're going to have the trust net, and everything of value, every stock, every bond, every currency, every commodity, every piece of art, every piece of real estate, all $700 trillion of assets in the world is going to be tokenized, digitized, and it's all going to trade on top of this base layer protocol. And so to think that we should only invest in Bitcoin itself, perfectly great investment, or things that are going to build on top of Bitcoin like layer 2, like Lightning, the best stuff is going to be on top of that, level 3. And as we open up, fintech is a scam. There's no tech. Fintech, all it does is take old payment rails that are 70, 80 years old and repackage it and get high valuations and then go down like fast. No, I'm just kidding. But the key is that we're going to have huge wealth creation, exponential wealth creation. And I'll give you just a thing to think about as you leave. So take a piece of paper sometime today, fold it in half. Fold it in half again. I defy you to fold it 7 times. If you could fold it 20 times, it'd be as high as this building. 30 times, atmosphere. 50 times, the sun. 100 times, the known universe. So exponential growth is what this is all about. And that's what's coming on top of this foundational layer.
I like the framing of fintech being a front-end innovation, crypto being a back-end innovation.
Exactly.
and ultimately the things that need changing are the pipes.
We need new pipes, new rails.
Yeah, I do want to come back to Pete with this and kind of touch on something that you alluded to. There is this trade-off between security and speed and flexibility of the platform.
Yeah.
Is Lightning, is this Lightning stablecoin, honestly, is this going to compete? There's $180 billion worth of stablecoins that are trading mostly on Ethereum right now. Is Bitcoin going to be digital gold and ultimately realize its potential as a standalone digital sovereign grade currency, like outside money, as it's starting to get popularized with the sanctions on the Russian central bank reserves? What do we think is the end game here? Because you can move much faster with all these other applications on other chains right now, and Lightning is just orders of magnitude smaller and arguably less battle tested as a result. So even though Bitcoin, the base layer, is secure, how do you think about investing in Bitcoin as a layer one or around that right now?
This is going to sound like a cop-out, and I apologize, it's not. I think we don't know. I think it's too early to know. I think that, and I applaud what Alyse is doing. I think a Bitcoin-only fund is a bold, interesting, exciting structure that allows you to go deep, deep down the rabbit hole of all of the potential use cases and opportunities that exist there. The truth is the best technology doesn't always win. And we've got a lot of examples of that in history, right? Or else we don't need to parrot all those, but there are many. And solving for security versus speed is a very interesting dilemma, but it's a particularly interesting dilemma when we're talking about only the financial services components of this.
Yeah.
It's a less interesting dilemma, I would argue, again, people will debate this with me, when we're talking about social media applications or music streaming or many of the other applications that are being considered as this Web3 thing unpacks. With that said, again, we look at the world through a lens of use cases first. We think it's even too early to take the view that many of these use cases make sense on blockchain. Ultimately, there's some path that moves a world in which, we're all huge manufacturers and consumers of data right now. Well, it turns out as that paradigm has been built, a tiny universe of companies have captured all the value for the management, security, and control of that data. It does make sense to move that exercise onto a blockchain-based ecosystem in which we can all share in the value creation of securing and managing data. It's not clear to me that that's a layer one solution, that's a smart contract composable solution, or several, or that's a layer two solution built on blockchain, and you can make very compelling arguments for both. So we've decided to take the view that it's too early to know. We're going to do some of each. I will tell you that fundamentally in my heart, I don't believe any of this is winner take all. I think it's several take most, but it's not winner take all, and it's too early, frankly, I believe, and Alyse will disagree, it's too early from our perspective to take the view that DeFi, Web3, consumer apps, et cetera, are all going to unpack on top of layer two solutions that are built on Bitcoin. Could happen. I'm not ready to make that bet exclusively yet.
I'll say that's a partial cop-out, so I'll give you a B- because you could answer otherwise. But Alyse is a lot braver than you, so I want to hear what she has to say about Lightning and stablecoins in particular.
Okay, well, so first I want to address a part of the premise of the question, which was that Lightning is small relative to the activity on other chains. And so I think what is important to acknowledge when we're looking at traction metrics is what is driving that traction, and if it's something that's extendable to other use cases. So for example, if a protocol has become really efficient at offering decentralized gambling effectively, is that behavior, is what they've optimized for there, the developer trade-offs that have been made, is that extendable for use cases outside of gambling? So that's the way we look at what's happening for use cases across other protocols, because we're trying to find the gems that are going to work also on Lightning and Bitcoin. Now in the Lightning space, the behavior that's happening is really around payments and around micropayments. I use Lightning every day, and not to purchase goods, but within my chat application. And a lot of people use Lightning every day for things like gaming, and it's starting to also gain traction for earning. So the question now was about stablecoins on Lightning. What's interesting here, so stablecoins on Lightning are something that I think is really, frankly, a kill shot to other protocols long term. Maybe we don't see that in 12 or 24 months, but in the next set of years, we're going to start to see the value proposition of other protocols erode as a result of assets being tradable now on Lightning, especially stablecoins. But what's most interesting to me about that, which was announced yesterday, I believe, is that it shows the quickness of the adoption infrastructure feedback loop in the Bitcoin space. And the reason why you can do that, one of the reasons, is because it's not muddied by the incentives of having a token that people are gambling on the appreciation of. So instead, when we apply Lightning to a use case and watch adoption, we can get this really quick feedback loop. And so when Bitcoin was introduced as legal tender in El Salvador, all of that economic activity was happening via Lightning Network. So it was this incredible test for the robustness of the network. And what we saw was, for the first time, 3 million unbanked people in El Salvador were now banked via Lightning Network. And by the way, that's more people than are banked by El Salvador's regional banks. So just an incredible statistic. But what we also heard was that Bitcoin's volatility was a friction point, a really significant friction point for people who the money they take in each month is the same amount of money that they need to spend each month. And so that was quickly processed by Lightning developers, that feedback. And now stablecoins are available, will be available this year to be transacted on Lightning Network, solving a problem that emerged just in Q4 adoption. So we have these really quick iterations, and I think that distinguishes Lightning and Bitcoin from other protocols.
So I want to make sure that we have time for our lightning round, which hopefully will get us all booed off stage.
Okay.
So it's going to be spicy. But before I do that, do you want to take the other side of this when it comes to stablecoins? Is non-Bitcoin stablecoin adoption too far ahead?
No, I think
that there's a kill shot.
I think stablecoins is a critical point to the entire future infrastructure. And the question was like, is Bitcoin going to be the number one or whatever? I think our take is that the markets are adopting Bitcoin and digital assets, and stablecoins are a massive part of that. And they could balloon 10, 100 times, 1,000 times bigger than they are today, very easily with the infrastructure. It may come back to Bitcoin also, so there's those both there. So our take is that this is one of the biggest opportunities in venture capital of all time, because the financial markets are transforming, just like the consumer markets transformed from Amazon, from Barnes & Noble, just like business to business transformed into SaaS. This is the new venture capital era about digital asset transformation. And that's a $27 trillion opportunity, which is 10 times bigger than the dot-com opportunity. And stablecoins have to be a component of that, because the countries aren't prepared yet to adopt Bitcoin as a natural.
I mean, I'll let you go to lightning round. There were 80 internet protocols. Today there are 5 that matter. There's not one. There's not going to be one in the trust net. There'll be 5, 6, 7. Yeah. It's not going to be one.
So Alyse gets credit for the kill shot then. I think that's the line of the panel so far. All right. So investors are paid to be contrarian and right. And we're all contrarians up here because we were bought in early to Bitcoin and crypto generally. What is your hottest contrarian take that might get you booed when it comes to investing themes? I'll start with mine, just so I'm not kind of putting you all on the spot. I think 21 million is a soft cap, and ultimately we'll see 1% to 2% permanent inflation to make up for the fact that transaction fees will not be an adequate security model. Please, thank you. There we go. There's a boo. Now,
Run him out of here.
Let's see. We can go either way across.
Mine actually is. I'll try and make it quick because it can get complex. Mine is along the same lines of the stablecoin discussion, which is stablecoins can only fully unpack in the way that they will be needed to globally if it's not all backed by US dollars, and nobody wants to talk about that out loud. It has to be a basket of currencies for it to work. And the reason for that, and this comes from many years in EM economies, People like to think of the US dollar as the reserve currency of the world. That's not the case. It's the reserve currency of the West. And as a function of that, the reality is there's massive demand. If you flip the switch and suddenly the whole world is banked, the whole world's going to want dollars immediately. If we had a global megaphone and the 5 of us could at 9 o'clock tomorrow morning make a comment that the whole world could hear, and the comment was, anybody in the world that wants US dollars and it from any currency can convert today, guess what would happen? Massive conversion. The US can't let that happen. That's why FedCoin will be difficult. They have to have some level of currency controls. Otherwise, the demand for dollars is so great that our already fragile trade relationships in the United States go completely sideways. So what nobody wants to talk about is for this to unpack properly, a stablecoin that can truly freely float everywhere will have to be some basket version. It can't all be dollars.
Lightning round, 15 seconds.
Sorry, that was...
Investment and speculation drove the first wave of Bitcoin adoption. Going forward, it will be earning, largely driven, in significant part driven by stablecoins on Lightning.
All right. I would just say that if you have a very, very large percentage of your net worth in Bitcoin, that's fine, but you would do better to have an extended portion of your net worth in the things that are going to build on top of it. So the innovation that's coming prospectively is way bigger and better than the innovation that's happened so far.
And then mine's two-part. One is Lightning growth might not be driven by payments. Could be something like content, like Zion or something like that. And second is that Bitcoin-backed transactions and yield will become a massive part of the next wave. And there's a ton of VC opportunities in that space. And I think that's where Bitcoin maximalists will start to realize there's other places to make a lot of money in funds like ours and stuff like that.
I think, as it should be, I was the only person booed, so thank you to
Congratulations.
and, we'll see you around.
All right. Thanks, Ryan.
Welcome back, your host Nolan Bowerly, to Bitcoin 2022 here in Miami. You're about to see the greatest post-analyst talk in the history of keynote speeches and everything. Today, it's all about institutional investment theses. And Robert, we heard a lot of people giving their take on investing on Bitcoin and what's the case, and not exactly clear in what we just saw, even though we got from some of the people with the most coherent, consistent investment thesis and success. But you brought up a couple points off camera about their thesis and what they were missing, but still sort of got right. You want to share them with our audience?
Yeah, I mean, I think they're focused on a term that's very used very widely in Bitcoin, which is censorship resistance. This is one of the benefits, clearly, that's core to Bitcoin as money. But in its higher order protocol development, that attribute can be added to other features like communication channels. So they mentioned Zion and Impervious, for instance. They're trying to develop censorship-resistant social media protocols such that we have freedom of speech in digital space. Also mentioned was Casa, which is a multi-sig custody solution that really optimizes the value proposition of Bitcoin, and that you can hold it in a self-sovereign way, but also with redundancy. And so I think to simplify this investment thesis, censorship resistance just means freedom, ultimately. You're free from the opinions of others, you have minimal counterparty risk, and you have low risk to no risk of being deplatformed, canceled, censored, etc. So it's interesting to see how many things Bitcoin actually fixes through that lens, and it's interesting to see how much capital is being allocated towards those projects.
So smart guys definitely talk to sophisticated institutional money. They have words that are maybe a little more complicated. Censorship resistance. We can really say freedom.
Yeah.
Scott, did you pick up any more of that? Words that could have been simpler but were a little complicated. Did you see some of that there?
Sure. I think that they were doing a delicate dance around, obviously talking about things that you're not allowed to talk about at the Bitcoin conference, right? We even heard a few of the words. Selkis came out and said that 8-letter word that we're not allowed to say. And Yusko, I would wear a Yusko's God shirt if I could, but he went there and actually said Web3, right? So obviously we know that everybody's saying they're sound tech maximalists. They want to build on the most secure network. That is Bitcoin. But we obviously know that there's other building happening in this space. And it's okay if some of that is successful as well. as long as we focus on the most important assets, which is Bitcoin.
So we did hear some pretty interesting and coherent discussion around emerging markets, especially from Peter Najarian when he was talking a bit about the ability of these people in countries that maybe don't have a sophisticated Wall Street institutional side, but just the ability to save, we said, was really important in their local currency. Now, you've got some experience with your nonprofit Students for Liberty, a bit about these emerging markets and how these financial tools really are accessible if the currency isn't being manipulated. So would you care to share a bit about what you heard from Peter and your perspective working in these emerging markets?
Yeah, I was actually very surprised to hear that the panel addressed that quite a bit. They were talking about the need not to lose focus of like the individuals that this technology can help. Because right now we're talking so much about investments and the money we can make and like people get excited, NGU numbers go up. But we cannot really forget about the individuals whose lives are being completely changed by this. Because we're living all like in Western societies, right? Like, yes, we have like 7.9% inflation. We can live with that. It's painful, but we can live with this. I have a colleague in Nigeria, a country which is large. They are dealing with 17% inflation. He has to pay every single day a guy to get gas in the morning so that he can power his generator because there is no electricity. You don't have any chance to have like a low time preference in that society and actually save. Now, since he discovered Bitcoin, he has something so that he invests in himself and in his family. And that's what these guys were also talking about. I'm very grateful for that because, yes, we live in the West, but there's like over 2 billion people close to it that live with 10% inflation or more. We might be there soon. Like, let's talk again in like 6 months or so. But this is really revolutionary, and they're pointing the finger in the right problem because that also gives a much better investment case, not only for the people who have big money, but like for everyone to be part of that, to support something for humanity.
You heard it here, support something for humanity. We hear it in the whole idea of heading down the rabbit hole. In this place, you have to run just to stay in place, and you got to go twice as fast just to get anywhere. We'll head back and we'll hear from Nick Szabo soon, really the god king of what we're doing here. Invented the whole idea of a smart contract. We'll hear from him next. Thank you. See you at the next break.